Here's the story of a bearish trader who was selling into every single bounce. All his orders hit the bid, such a sucker. Sometimes you buy the dip. It's the story of a bullish trader who was buying each down tick he saw. He averaged down and rarely stopped out on the edge of blowing up. Until one day they subscribed to Routine Trader and realized they can do both buy and sell. That there are two sides to Mr. Market, and beating him both ways is pretty swell. Yeah, pretty swell, so very swell. Beating Mr. Market both ways is pretty swell.
Cheers to a new trading day, Friday, casual Friday retail trading team. I'm Mastro, and this is your routine briefing. So, as we have the release of our lovely Michigan data, where I believe they poll 50 random people and ask about their sentiment, we're seeing a squeeze based on that immensely important data coming out. So for me, nothing really going on right now, so we're going to go ahead and jump to this briefing, talk about some levels that I think will be key today and how I plan to trade around them, and maybe some ideas of how you might want to trade around them too. So let's go ahead and switch screens. You can learn how to use my software here. Stand by. Okay, so let's just start with the warp document first, and then we will go into the tape and discuss what is going on there. So I'm going to check those numbers real quick. We rallied, so I assume that they're good, whatever that means. I don't really even know how the University of Michigan consumer sentiment, I don't know why that's a thing based on what it is. If you want to laugh, look up what that actually is. Let's see, so the forecast was 71.4 and the actual 71.2. Again, if you're watching this and you're in the chat, one of the two people who watch these videos, I would love you to tell me why that is even moving markets. So obviously we never know anything, yet it's always really funny to me. It's one of my favorite data releases because it's, a lot of these are kind of fake numbers and just excuses to move the markets. Yeah, I really cannot figure out why the University of Michigan is a red event. So I use Forex Factory. Red events mean the most market moving to this day. I very often trade around them, but I'm just don't really understand what's going on there. So anyways, I digress. Let's jump to that warp document and see what we got going on for today. Okay, so last night's inventory down and balanced. Nothing too much to see there. No real surprise. Did have a nice rejection of that former support at 93 and kind of a move back down the levels from there. We're popping back into kind of the neutral area, we'll say, of that overnight range as we speak. So again, I don't really see anything too much going on right now. You did see that for the open itself, that first 30 minutes, you did have that open auction. So again, no real conviction here to start the day. So I'd say the notable thing so far is we did have that bounce as soon as we had the release of this data from the lower side of that expected move. So expected move zone today is about 66 to 69, yet that's just based on the standard deviations, not really any important level down here that I'm seeing. So you can see the SPY levels, by the way, that I'm looking at here. Most important being that 443 level, and that's really what I'm focused on today. And I'm going to be pretty patient, definitely on the buy side to that level. To wait for that level, and I will fade this price. We just continue popping here. Yeah, there's a lot to talk about, I think more so in the tape than on this warp document, but as always, this is in the description of the video, as well as all my other resources, including routine day trading document, which is how I trade. So let's talk about the tape, and let's first talk about I'm not going to talk about yesterday. So in the newsletter, if you're not a subscriber, that's at retailtrading.com. I do have a breakdown of yesterday's tape and really the A plus trade from yesterday. So if you're interested in strategy and that type of thing, more of that in the newsletter. But today, like I said, I want to focus on the SPY 443 magnet. So real quick, pop to the weekly, see what's going on here. We are still, let me make sure, yep, value hasn't moved yet. So we're still hanging out in a state of imbalance, tentatively nearing a test of this really key 443 level. This data is a little bit delayed, by the way, on the SPY. So we are actually at 445 in the SPY. So ignore the price changing on the side there. In any case, 436 is really that level on the weekly chart. Until then, we remain in a state of imbalance, and the bulls remain in quite dominant control, I would say. So this pullback here, as we'll see in the weekly chart, to me is just kind of looking like a bull flag. Still bull flag. You can see that very well formed and targeting a test, I think, of this 443 level. I've been talking about this 443 level for weeks. We got pretty close this morning, didn't quite nail it. I'm waiting to see if we might come back down and nail it from here. And that's really the main level that I am focused on for today. And hopefully we hit it today. It'd be a real nice way to end the week to get that nice trade. Yet if we don't, I do still think that's a downside magnet. That's also the 50 SMA. It is also a test, pretty near test of the 4 standard deviation VWAP. Another thing I've been saying for weeks. Remember, this is the most overextended in terms of raw price, not percentage, but in terms of just price I could find going back to 1998 on this 4 sigma extension beyond the VWAP. So what usually happens with those significant extensions is you do have this corrective move. Often the correction is fairly steep. So I'm not necessarily certain. I mean, we're never certain. But particularly not certain here that we're going to bounce this 443. So I'm really just looking at it as a trade. So let me just look at my various notes here. Like I said, that is the edge of the expected move as well. It's actually slightly below the expected move. So again, just adding to the probabilities of that trade. That, like I said, is my A plus trade of the day. I will take a short if I get a signal before then. Yet, if we still kind of chop around, don't get that clear signal, that 443 gap fill, assuming a bounce with all the confirmations that I talked about in that routine day trading document, assuming that is, I think, the A plus trade for today. And again, I talked about yesterday's A plus trade in that newsletter. So if you're not a subscriber, I'm starting to do that from now on. So we have a nice little strategic component that will be helpful to everyone. And just a side note, if you looked in that warm-up document, you saw examples of acceptance, examples of my setups. I packaged them all in that document as well. So if you need a little cheat sheet to, well, if you like the setups and you find them helpful, there's a little cheat sheet there. It's all crammed together. So let me know if you like that, or if you don't like that, I can obviously adjust as well. I did have a really good recommendation yesterday from somebody emailed me back just suggesting that I put in a link to what exactly an outlier is. So even small things like that, I really appreciated. Again, trying to make this more helpful for all involved, because what that usually happens is I do have the selfish desire to help myself, and I think that your suggestions are usually helpful to my progression and development as a trader as well. So anyways, another digression aside, that's 2 in 10 minutes. Let's see if we can make it 3. Major caveat here about this 443 level. So let's look at it in you can see it here, everything I just described on that daily. But if we look at it a little more closely on the structural chart here, this is ES. You can see that that is my line in the sand for today as well. It's that cyan line there. So the major caveat is we get that gap fill, we start to accept below. So you do have the, I believe 43 is the outlier level today. So we have a 99.7% chance of closing above 43. Yet sometimes outliers do occur. And if you start to see acceptance below that SPY 443 gap, which is about 50 to 55-ish in the ES, acceptance below that, I think it's a pretty quick trip to 4,400. You can see on this chart here, I do have, if you can see it, it's I purposely don't make them very salient, but you can see these little dotted blue lines. So those are potential supports down to 4,400, but really the major support is not until 4,400 once we lose that 50 to 55 area. So there's quite a significant void, I think, if we do see acceptance below that. So it's definitely going to be trappy. I shouldn't say definitely, almost certainly going to be trappy. So I'm not playing the breakdown there myself. Even if we do break down, I'm looking for that bounce. I will not be playing any breakdown unless you see a bit of a bounce draining some of that demand, and then we kind of slowly drift back below and get a nice confirmation candle, and then you see that speed and aggression, then perhaps you can take the short. But I just want to point out, yes, it's a high probability bounce area, but if we lose it, it's a pretty big drop. I think it's a pretty quick move to 4,400. So just one little caveat there, and that's why any bounce play is just an intraday trade for me. Because if you look at these candles, so starting on this chart here, this is the 4-hour chart. You look at the structure of yesterday's outside bar. This is the kind of the dominant candle from the session. It's not quite an engulfing bearish because we do have, I think it's called like a tweezer top or something. I don't know. It's some type of thing, but really I just see that as the aggression. When you see those outside bars, especially when they have such a long body. So again, you go to that routine day trading document, you can see, I believe this is candle number, I think it's 6 or 7. You'll see it if you look at that document. This is a very dominant type of candle on the 4-hour. And then furthermore, we go back to that daily chart. You also see the outside bar on the daily, and again, kind of that dominant reversal type red candle. So we've had a couple confusing candles lately, especially on this daily chart. You've had 2 reversal 2s to the bull side. I thought we were building that bullish base. I'm not so sure now. Again, we're still in the flag, so and we're still above that 436 area on the weekly, so I definitely do have that bullish bias still. Yet it's notable that we have some pretty bearish looking candles on both that 4-hour chart and the daily. So again, just that's why this 443 trade is just a bounce play. I'm not getting into any long swing position, although I don't see that as such a bad idea if you are interested in that type of thing. But again, gotta look at it holistically, and holistically the bears, in my opinion, are still in charge intermediate term and definitely short term. So we will see what happens today. I'm looking at the chart again. Looks like the bulls are trying to hold that 70 level, trying to put in some type of cute little double bottom thing here. But intraday, I'm just not interested in any longs until we get to that 443 area. So for the short, I will play a short if it pops up again. If, it's in that routine day trading document. All my credentials or not credentials, my qualifications, we'll say, for not me personally, but the signal. Anyways, yeah. So I'll take one of those, but that's not the A plus trade. A plus trade is that 443 area. So we may get it, we may not. That is what I am looking for. So. Oh, also on the TPO, I'll point out on the TPO, that is the final kind of naked POC. So remember kind of how this balance thing works is it very often targets the POC of an older balance area, which is often that naked POC, and you can see this one here untested. So 56, some more confluence there on the TPO as well. So the final component, and I think the strongest case for bulls, especially right now, considering we are rallying pretty strong and nowhere near that 443 at the moment, almost $2.50 above. In fact, it is what's been going on in volatility. That is the major bull case, I think, for today. It's diverging relative to ES price. It's below currently, as we're speaking on this routine briefing. It is below that 1760 area, which I see as the pivot for today. Still holding the triangle, but consolidating along the bottom side of that. So volatility is in fact red on the day, I see here. So that is quite a good bull case, I would say. There's really no fear in the market. And it seems that we want to continue to recover. So we'll see if we ever get that 443 gap again. Looking really bullish right now, especially as this volatility continues to sell, holding below 1760, super bullish on the day. So we will see what happens. And that's all I got. So I'm going to package this all up in the newsletter for you, get that sent out ASAP, and hopefully it'll be helpful for you. And if you do find these videos helpful, I find it helpful when you give them a like. That helps the YouTube algorithm. I believe we went from 2 to 5 or 6 views yesterday, so doubling or tripling our numbers is excellent along the quest for Routine Trader to get back to those double-digit views. So again, I appreciate any likes around that, any engagement, be it in the comment section of this video, responding to the newsletter itself, retailtrading.com once again, or on Twitter where you can find me at Routine Trader. I appreciate all the engagement, all the suggestions, and anything that helps us both trade better. So you all have a great weekend. I hope you have an excellent trading day as well, and stay classy until Monday.